What's happening in our national real estate market and how does it apply to you? It appears the housing market hiccuped in May and has picked up right where it left off. Hi, I'm Ryan Cook with First Class Realty Group at HomeSmart First Class Realty. Interest rates continue to remain at historic lows. According to Freddie Mac, these low rates have ignited robust purchase demand activity, which is up 25% from a year ago and has been growing at double-digit rates for 4 consecutive months. The biggest challenge we're facing, however, is a lack of supply. Compared with a year ago, sales are now up 8.7%. Sharp increases were reported across all regions, with the Northeast and West driving the surge. On a year-to-year basis, total inventory was down 21.1%, the 13th consecutive month of decline. It's unlikely that inventories will improve anytime soon, which means home prices will likely continue to rise steadily throughout the year as surging home demand and lean inventories put upward pressure on prices. Who are the buyers that home sellers should be focused on? According to the National Association of Realtors Generational Trends Report, millennials, which is anyone born between 1980 and 1998, they took the lead as the largest group of home buyers last year at 38%, and will continue to be so moving forward. Now, what does that mean for sellers? Well, according to Dave Ramsey, there are 3 things sellers should focus on to get the top potential price for their home. First, upgrade your online listing. Virtually all millennials, 98%, use the internet for their home search, and 78% of them found the home they purchased on a mobile device last year. So, you need to hire someone who A, will invest in high-quality listing photos, B, will also take video and/or drone footage, C, offers a 3D digital tour of your home, and D, someone with a digital marketing strategy to get your home in front of those 98% of potential buyers looking for information on your home. Number 2, highlight perks over size. Yes, size matters. But millennials are more concerned about their commuting costs and how close their new home is to schools. In fact, most millennial buyers said they were least likely to compromise on school and neighborhood quality when deciding which home to buy. So, highlight the benefits of your home's fabulous location. And third, know popular features. Here are some of the top home features millennials want. 86% want a laundry room, 81% a patio, 80% garage storage, and 79% a walk-in pantry. So if you're thinking of making some upgrades to your home, choosing one of these might have millennials showering you with offers when you are ready to sell. Now let's talk about housing turnover. Economists and the president both expected to see a V-shaped recovery, which naturally meant that the news media had to bring on economic experts of their own to refute those claims. So, who was right? According to the data, the president. The recovery in the housing sector couldn't be a much more perfect V. But where are the bulk of the sales occurring? Unfortunately, not here in the Northeast. The bulk of the sales are occurring in the South, which is basically from Maryland down to Florida and over to Texas. For buyers here in the Northeast, the data shows what you already knew. We need inventory. Badly. COVID hit our neck of the woods particularly hard, which accounts for the very low home sales numbers in our region. Now let's move on to new construction and new home sales. Now the builder confidence is actually at an all-time high. The latest reading of 78 on a 100-point scale on the National Association of Home Builders Housing Market Index is up 6 from last month's 72 and at its highest level in the indicator's history, matching its December 98 record. Housing starts rose 22.6% to nearly 1.5 million annualized units in July. Total starts are up to 23.4% year over year, and I was most surprised to see that most of that is not what you would think. Single-family starts rose 8.2%, while multifamily starts surged 58.4%. But can we maintain this? Residential building permit applications rose 18.8%, which indicates residential construction is going to pick up. But expect the cost of the new construction homes to rise as material costs continue to rise, particularly the prices of lumber. New home sales have risen to the highest level since 2006. However, according to Freddie Mac, it's still not enough. We're on pace to build around 1.1 million new homes this year, but to meet demand, we should be building between 2.5 and 3.3 million homes a year. Moving on to interest rates. The Federal Reserve at its recent meeting recommitted itself to keeping short-term rates near zero until the economy has weathered recent events. The Fed is also continuing to purchase $80 billion of Treasury securities and $40 billion of mortgage-backed securities every month. The 10-year Treasury yield has risen only slightly off its record low of 0.5%, but mortgage rates have not fallen as much as we would expect because of heavy demand for mortgage refinancing. Lenders can get higher than normal margins on loans as long as there's heavy demand, and applications to refinance are still more than double last year's level. Remember last year when we were about this time, we were talking about the R word, recession? According to Kiplinger, the inflation rate should end the year at 1.1%, far below last year's 2.3%, so I think we can put to bed any talk of a recession. Right now I'm seeing rates in the fixed rate mortgage as low as 2.25% for those with excellent credit, and an overall average of 2.86% according to Freddie Mac, and that probably won't fluctuate much over the coming months. So what does all this mean? Well, home inventory will continue to be a challenge for anybody looking to buy in the near term, and we probably need to be flexible on our definition of near. Homeowners can expect to continue to see equity growth for the foreseeable future. The Northeast has seen growth of close to 10% year over year. And interest rates aren't going to budge much. If you're looking to buy, don't wait. Yes, prices are rising, but interest rates still remain historically low, keeping homes affordable. Don't listen to all the hype. Listen to the true facts. Reach out to one of us at First Class Realty Group, and we will make sure that your best interests are served. And as always, who you work with matters, so work with someone who cares, has the heart of a teacher, and always puts you first.